Alrighty guys, so in today's module we're going to be talking about the change in the state of delivery, market structure shifts, and also some key, algorithmic signatures that you can look for in price action. So very similar to the last video, lecture style format, going through a PDF as well. Now, a lot of people ask me like, what's the difference, Ruben, between a CISD and a market structure shift? What are the high probability versions of each of these two, and how do you identify that in the market? Both these things, just so you know, both are important concepts to understand. I think a lot of people, including myself, we start off with a typical market structure shift, and as time goes on, you look for other potential entries, maybe because you've missed moves, right? And it's really important that you have to pair this with other confluences. Just like any kind of concept, the more confluences you have, the better off it is. Now, looking at this image above, I've denoted two things, and I'm just going to zoom in just a little bit here. I've denoted a CISD, or a change in the state of delivery, that's in green, and I've also denoted a market structure shift, and that's in black. Really important here, this down close candle, this one here, that there's an order block. So you have to understand order blocks before you can understand a CISD, because they're paired together. Essentially what happens is price sweeps this swing low, it sweeps liquidity. The last down close candle here, when we break above that, we create an order block. So that candle is an order block, but it also is the first sign of a change in the state of delivery. What does that mean? It means changing from, in this case, bearish to potentially bullish. That's the first thing. Now, often but not always, depending on how price action looks in the structure, a CISD comes before a market structure shift, and then when the two are paired together, it's a high probability. So for example here, we do have a bullish fair value gap down here, but do we return to that? No. Yes, we've got an inversion fair value gap here, but if you're not looking at that, you can potentially enter off a CISD and a market structure shift, and that'll be completely fine. We'll talk about that as we go through in this lecture. Again, the point of displacement is important. You need some kind of displacement. So you don't really want price just to wick above. It's the same with the market structure shift. Unless there's a bunch of confluences, you'd rather price close above with a displacement candle, a nice green candle, if not 1, 2, or 3. And you can see here, right? Down close candle, we sweep liquidity, green candle. The next couple of candles are green too, and we also have a market structure shift. So just keep that in mind when looking at this. There's good examples, there's A plus, B plus, C plus examples. And again, it's desirable to see that displacement in the candle and the body close that creates the CISD or the market structure shift. Keep that in mind. Into a second example here, and hopefully you guys can see what I'm talking about. Now, sometimes it's not as clean. Like obviously in this example here, you've only got a few candles to work with. In this case, there's more than one, right? There's multiple candles. You might be saying, okay, where's the CISD? Where is it? Again, last couple down close candles, we sweep liquidity, and then we have a shift in structure. All of these candles, really, really important to note down, and I've mentioned it down here somewhere here, right? The bullish order block is not just a singular candle in this example. It's actually all these candles. A lot of people do it wrong. All these candles are the order block. So when price closes above that with some displacement, that then indicates a change in the state of delivery. This swing high gets broken above, that's a market structure shift. And then all price is doing by retracing down is retracing back down into this bullish fair value gap to then push higher. That's important. So again, it's not the be all and end all, but often, the CISD or the change in the state of delivery is going to be the first sign, or I guess the first indicator that price may want to reverse. Paired with time, paired with a sweep of liquidity, as we'll get through in the further slides here, and a market structure shift, you can phrase some really high probability trades. Of course, sometimes you can enter straight off a CISD because there's other confluences below, and we'll talk about that as we go through these slides as well. Really, really important to keep in mind. The more confluences, guys, the better. And let's get into it. Now, I've labeled this advanced concepts for a reason, because we're going to put together not only the CISD, we're going to be talking about sweeps of liquidity, we're going to be talking about optimal trade entry, BPRs, fair value gaps, different changes in the state of delivery, because it's not just one, it's a continual process. And this will allow you to see if you're onside or offside with the market when you're in a trade, just to see how price action is developing. So firstly, I've labeled a few things here, guys. I've labeled A, B, C, D, E, and F, and each of these things are important concepts to talk through. Now, at point A, pretty simplistic, we've got a swing high over here, and we purge that swing high. In other words, we raid that buy side liquidity. every single time we sweep liquidity, there's an opportunity for the market to reprice. Obviously, if it's during a macro or a silver bullet session or a kill zone, it's even more probable, of course, right? So we sweep buy side liquidity, and what I've labeled here is a CISD. Now, what's that mean? How does it apply to the situation? And what does this kind of show you? See this big green candle, right? This big green candle here that actually sweeps the buy side liquidity. It's quite big, right? It's massive. The fact that price can close below tells us something. The price closing below here tells us something. Yes, it's not with such big displacement, but we're still closing below, right? And what happens here, we have an initial change in the state delivery. Price comes back up, right? Purges more internal buy side. Now, here's the important point. A lot of people, for example, may be, going short from this inversion fair value gap before the CISDs happened. It's less probable, right? Or you can have withstand this. So realistically, what you do is A, B, C. C, now we've purged or we've rated more buy side liquidity, and all price is doing, right, from point A at the top here to this swing low. If you drew a Fibonacci from this swing high to this swing low, I guarantee you price when it comes up at point C, it's just returning to OTE of the previous range. Sweeping buy side liquidity in OTE, plus we've purged liquidity on a external time, if you want to call it that, and we've had an initial change in the state delivery. So essentially, all these things work together. It's not just one thing. When you're looking at price and advanced concepts or algorithmic price signatures, it's about looking at one thing, how that flows to the next, the next, the next, the next, the next. Keep that in mind. So to phrase a really high probability trade, this is what we can do. We see the initial sweep, we see the CISD, then we see the purge of buy side liquidity, then we close back down again, and this creates a balanced price range, right? Big bullish gap, inefficient in sellers, right? So buy side imbalance, sell side inefficient. Now we are efficient in sellers, right here, right? We create that balanced price range. Interestingly, what does price do? Comes back up again, very weakly, raids more internal buy side at point D, and displaces lower. Again, if we apply the same principle, guys, this is the last green candle that purged liquidity. When we break below that, it's a CISD. This is the same, just on a miniature scale. So you can apply these in all time frames. It doesn't just have to be on the 1 minute or 2 minute, 5 minute, 15. It can be the 30 second, 15 second, but you can also apply it within a price swing as well. When you're watching price develop or print from here to here to here to here, you're going to see continual sweep of deliveries or CISDs after liquidity has been swept. That's really important to keep in mind. So again, you've got point C, point D here. You sweep that internal buy side. These up close candles, these ones here, when we break below that, right here, that's a CISD. And we have a larger time frame CISD, because point C and point D, they're both sweeps of liquidity. A, C, and D, they're all sweeps of liquidity. A is the initial sweep, C is the second sweep, and D is the third sweep. Therefore, the green candles that create the order block, these green candles, this green candle, these green candles, when they get broken below, they indicate a change in the state delivery. That's the initial one, this is the second one, and this is the third one. After the third one there, guys, it's pretty safe to say that price wants to move lower. Where does it want to move to? A level of premium or discount, in this case to discount when it moves down, or to target imbalances or liquidity. So you can see once we have that larger CISD, we then form this sell side imbalance. That's an opportunity to go short, or you could even enter straight away from the CISD. Put your candle or your stop loss really tight, because you've seen all these pricing just play out. So when you're using CISD, you're reading price action as well, you're using other PDRAs, seeing how price behaves. So again, we've unpacked this already. We've detailed, how you can pair a CISD with other confluences, other PDRAs. We've talked about points A, right? A, B, C, D, E, and F, and how you can use this to phrase those high probability trades. And again, pairing a CISD with liquidity being purged, it already introduces a high probability change in the state delivery. Again, you sweep liquidity, the market can reprice. You don't sweep liquidity, what you'd have to see is probably a SMT or like a 3 drives pattern, for example. Now, after talking about that, let's just extend on that a little bit further. And I do want to discuss some more advanced use cases of, CISD, and then pairing this with other concepts, because a lot of people are curious about, why doesn't price return? Like, look at this example here, for example. There's your buy side. We've got low resistance buy side. why doesn't price come down here? Why doesn't price return to this gap that I've labeled breakaway gap? What I want you guys to see again is this down close candle, this down close candle, there's three. They're quite large, right? The fact that we can break above this down close candle with some displacement indicates to me that price may want to seek higher prices, right? It may want to reverse or retrace. It's really important to keep in mind. And what you notice here is that price digs back down into this order block perfectly. And look at the wicks, right? Here's really important. And we've talked about this when we talk about the purge of liquidity too, but it's the same for any PD array, how price behaves inside that PD array. So what you can see here, you've got these down close candles and then price closes really, really aggressively above that, right? We dig back down into this order block and look at how these wicks are, right? The bodies don't even close below, which is really, really important. And we don't even return to this fair value gap. So I've mentioned it down here, right? I want you to notice that when you have, in this case, three very large down close candles and price can close above these candles with a full green body candle, it just indicates, right, that price is not really that bearish anymore, because if it was bearish, then this bearish fair value gap should have been respected and we shouldn't have closed above these candles, because then in this case we create an order block and we also create a change in the state of delivery. Really, really important. So in this case, there's also no typical market structure shift. You might say, oh, that's a shift in structure, but a lot of people are waiting for this swing high to get broken or closed above, but we don't do it, right? Notice how in this case, we do sweep the high, but only with a wick. A lot of people are waiting for a closure above this high before they enter a long position. By the time you get that, it's too late. Why doesn't price need to give you that? Because we've already shown the hand, right, in the market that price doesn't want to go any lower. This could be in a key, time frame too, could be silver bullet. And when we see this pricing just play out, it's important to pair these things together and come up with a range of ways you can enter, and CISD could be one of those factors, or could be one of the things you look for before entering in a trade. So again, there's no typical market structure shift, as only the wick purged the next swing high. For most people, they're waiting for that shift and they're waiting for price to return to a fair value gap. In this case, we don't. This fair value gap, we don't return to it. Instead, we react off this order block, which we can do. Any PD array, when we come back down in a level of discount from this swing low to this swing high, we can react from. That's completely fine, right? However, the price signatures we see here are enough to believe in the reversal of price action. That's important. The fact that we've broken with extreme displacement through these numerous down close candles, paired with an inversion fair value gap and paired with a breakaway gap, it just indicates that price at this point seems to be unwilling to move any lower. It's really, really important to keep in mind. Again, this is a good thing, because if price is really bullish, to be honest, you wouldn't want to see price dig too far down. And when price is really bullish, that's when you get cases of price barely tapping into a fair value gap, barely coming down, and then just dramatically moving up. Why does it do this? Because we've got low resistance liquidity, right? We've already initiated this change in the state of delivery, and we're in a key time frame, in this case, silver bullet. Really important to keep in mind. Again, notice that when price retraces, we just tap into the order block, but instead of tapping back into the bullish fair value gap or the busy, it leaves it unmitigated. And what we're going to do here is we're going to actually zoom in a bit further. I'm going to take you through both the 1 minute chart now, a little bit more lipstick on the chart, a few more illustrations here, and then we'll go into the 30-second chart just to see everything and how it plays out. So again, that's the CISD. We've got the inversion fair value gap here. What else do we have? A breakaway gap, we've got an order block, and I want you guys to focus on this purple section. We've talked about it, but let's actually zoom in even further, right? Look at these wicks. 1 week, 2 weeks, 3 weeks. Interesting. Now, what I want you guys to do is have a look at this now as we go through and look at the 30-second time frame to see what price action is doing. This here, right, is exactly what you're seeing in this photo, right? These wicks. All we've done now is we've zoomed in to the 30-second time frame. That's all we've done. Now, isn't this, right, have a look, isn't this a swing low? Haven't we swept that swing low? Isn't this the last down close candle? Haven't we broken above that with some displacement? Haven't we created a shift in structure now? So notice in this case that when you're pairing these concepts, you're not only looking in the price swing on the same time frame, but if you really want to narrow it down and see if you're on side of the market, you can narrow down the time frames into smaller time frames, like refining, right? And you can see how price is behaving. So we sweep sell side, right? Really important. We sweep sell side liquidity. We tap into that inversion fair value gap, which again, on the 1 minute time frame, looks like this. That's the inversion. Bearish gap, we disrespect that. Tap into it here. And we also have a change in the state delivery and a market structure shift here too. So what are we seeing here? What's price kind of showing us? What's it showing us? It's showing us, guys, that the market wants to move higher, both on the 1 minute time frame as a reading price and then on the 30-second time frame too. Even here, we can say the same thing, right? This here is a low, we sweep that low. That's the down close candle. We break above that with some displacement, another change in the state delivery. The more you get, the more creations of order blocks you get in favor of your trade, the better it is, right? And really important to keep in mind, we'll talk more about this when we talk about order blocks, but the down close candles should be respected. So in an upwards move, right, these down close candles that get created, these should be respected and they should be traded into, but we should use those to push higher. So essentially it's kind of like a form of support, and you can see here how price reacts on the 30-second time frame. Again, everything is fractal. Doesn't matter if it's 30-second, 15-second, or if you take an entry on the 5 minute, you could then refine down to the 1 minute to see if you're still inside with the market. For me, that shows me that I'm still inside. So for example, if you entered off this inversion fair value gap, right, or off the change in the state delivery, or off the return here, then you go down to a smaller time frame and you see what's happening in price. You see another CISD, another market structure shift, a respect to this bullish gap, another CISD. It gives you more confidence doing the trade, and you can continually switch between just to make sure you're still inside. And that's where, you get good at having stop loss placement, having partials, mitigating your risk, because you get to see if you're still inside with the market. So it's really important to keep in mind. And again, lastly, to talk about entering off a change in the state delivery, I wanted to talk about how you can enter off one. What is a high probability CISD? How you can pair the concepts with this? How I personally might enter off a CISD and what I need to see to actually execute off that. So again, you can enter directly off a change in the state delivery. You can do it, but it's just like any other strategy or entry model. You need to have confluence supporting it. You can't just go, okay, yeah, there's some random down close candles, up close candles, we've broken above or below that. There needs to be more. It's the same, again, we've talked about this, the 2022 model, why so many people struggle. It's not just any random raid, market structure shift return. It's got to happen in a key time frame. There's got to be a clear drawn liquidity. You got to look at the slightly higher time frames. You got to make sure that everything's lining up and there's a narrative or a reason as to why price should go where you want it to go. That's really, really important. So in this example below, I have denoted numerous price signatures. I want you guys to look at a few things. The first is a BPR, or a balanced price range. And we'll talk about this. We'll talk about this in more detail. So right here, we've got a bearish fair value gap, as you can see. It's inefficient in buyers, right? So it's a sell side imbalance, buy side inefficiency. When price closes above like this, that creates a BPR, or a balanced price range. We haven't closed above these down close candles yet, so there's no order block created here. There's nothing yet to go off in terms of a CISD. Now, price creates that initial price signature. It comes back down, it sweeps internal liquidity. And again, do we displace lower after sweeping liquidity, or do we reject? Ask yourself that question every single time you're concerned. Is it a true rate of liquidity? Are we going to continue? Do we displace through, or do we reject? That's really important. If we reject, that's a true liquidity sweep. You can see there, we've got that swing low here. We sweep it with one candle. The next candle is green, 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 green. What do we have? BPR, internal sweep. Inversion fair value gap created. And then look, the last down close candles, we break above that with some displacement. That there is a CISD. You can execute off that CISD with quite a bit of confidence, because number one, you've got a BPR. Number one, you swept liquidity, or two, you swept liquidity. Number three, you've got an inversion fair value gap. And number four, you've got a CISD with some displacement. And technically, this swing high here, we have a market structure shift too. Then you got to ask yourself, is there a clear drawn liquidity? And the answer is yes. All these swing highs, low resistance, that becomes your buy side objective, and we do reach that. So it's really important, to put these pieces together. We talked about this already. Having as many confluences as possible is really, really important when you're using these concepts. One concept is not better than the other. So, a CISD is not better than market structure shift. It might indicate an early sign of reversal, but the more confluences, the more things supporting your bias or supporting your narrative, the higher the chance is that it's going to work out for you. I'm not saying it's 100%, but the more you have backing you, the better it's going to be, right? Based on probability and based on study. And that's what you got to start implementing in your trading. So again, hope you guys enjoyed this educational module. And until the next one, guys, I'll talk to you then. Peace.